Moving on, the government will invite bids from investors interested in buying a stake in 5 publicly owned companies, sugar companies, in 4 weeks' time. The Privatization Commission says that by then it will have fully consulted with farmers and management boards of the 5 sugar millers up for sale, paving way for engagement with strategic investors who are expected to own half of each miller. KTN's Charles Kitonga has more.
The long overdue process that will see the government sell its stake in 5 sugar companies has finally started. For 7 years, Miwani Sugar Company, Muhoroni, Nzoia, South Nyanza and Chemelil have had to sit as the bureaucratic process set out by the Privatization Act dragged on.
If we had privatized sugar, we'd have got out of the problem. You see, even countries like Uganda has more stronger private sector involvement in sugar, and that's why they're able even to fill in their deficit. In Kenya, we have lagged behind in the deficit. We have just been asking for extension of COMESA, safeguards agreements for every year, and we are not making any progress on how do we need to do to meet the deficit. So these are the costs of delayed decision.
But with the wind in its sails, the Privatization Commission has finally begun engaging with stakeholders, key among them boards of the 5 companies, political leaders in the Western Kenya sugar belt, and farmers in a bid to get the show on the road. The engagements are meant to iron out outstanding matters in regards to the privatization strategy. As it stands, 51% stake in each of the farms will be sold to a strategic investor, 24% to farmers, and the government will keep 25% with an option of selling later through an IPO.
We have undertaken most of the work necessary to commence the implementation.
However, as the government prepares to invite bids from interested parties, investors are taking issue with the lack of capacity in the millers. Most of them have been operating at 30% efficiency for years, which has raised production costs and reduced revenues.
We need to look at other ways of improving efficiency, especially around transportation costs that the farmers have complained a lot about. Automation of mills, that is so important in making sure that the improvements in automation is effected. Constant breakdown of our mills contributes to the low capacity that we're suffering from today.
To boost cash flow in struggling millers, the government has decided to write off debt amounting to 33 billion shillings and use the proceeds of the privatization process to modernize the dilapidated infrastructure at the millers. Charles Gitonga, KTN News.